Welcome to Momentum Monday. Today is January 22nd, 2023. Howard, what's going on? Have you been watching any American football?
Just watched Cowboys lose again. It's all's right with the world. I used to be a Cowboy fan as a kid. So look at this. I got emojis. I have handheld emojis. It's what's going on in the market, growth stocks.
I mean, actually, they're not doing that bad so far this year. They've been bouncing.
My trading, my portfolio.
What is this, your portfolio?
Hey, what do we got? You got a new book?
Yeah. So I just released a new book. I mean, it's been almost 5 years.
Is this written by ChatGPT or yourself?
Myself. No.
The book will probably do well because I'm not a co-author.
No AI was used in that book.
No AIs were killed in the making of your book.
Yeah, were tortured. And yeah, it's been 5 years, so I had a lot of new strategies and information to share, so I decided it's a good time. So if people just want to check it out, this is it. This is the book.
How are short-term trading use options and stocks to quickly grow your account? Look at you.
Yeah.
Is it self-published or is it?
Yeah, of course, self-published. So
okay,
yeah.
Congrats.
Thank you. So going back to the markets, the mini rally was tested last week. We had a pullback to the 20 to the 20
I have a new toy.
20-day moving average. I mean, you're just like Kramer. You just need a sound effect, and you know it can it can work.
I can't see. I got fucking a hat that doesn't fit. I can't.
Yeah. So the 20-day was tested, and we had a big bounce on Friday, and it was tested because we still have a lot of. There is a new Fed official talking almost every single day, and you know they share just various opinions. Some say, "Oh, it's almost over with the raising." Others say we need to stay at 5%, go to 5% and stay there longer. At the end of the day, I think the market is happy that the economy hasn't been destroyed with 5% interest rates.
That's the only thing working right now is relief that the world still exists.
Yeah, with 5% interest rates, and obviously we already having
nuclear weapons, like at any moment. Like I mean, the bombing is still going on. Like,
yeah, it's been already a year there, and it doesn't really show any signs of ending soon. In the meantime, a lot of the big tech companies have started massive layoffs. I mean, not massive for their size, but pretty significant between Microsoft, Google, Amazon, and Facebook. I think they let about 50,000 people go, which I guess is maybe it's good news for you.
Real income. You do 50,000 times 300K, you get some real spending that's going to.
Maybe we see a lot of new startups, so good news for you. Maybe we see a lot of new traders, so maybe good news for me. So, but the market's not breaking down. It's the dips continue to get bought. I think the only industries that are under pressure right now are those that depend on government subsidies, like solar and defense stocks. I guess there's a lot of talk about the debt ceiling getting approached and a lot of quarrel going on between the two parties. So those two sectors are kind of the weakest, and then select stocks in them. So solar and defense. So I would expect that if the debt ceiling is raised.
I was gonna bring this up. Wow, Northrop Grumman. There were TV commercials in the Super Bowl. I mean, not Super Bowl. Much like a lot of TV. I mean, what the hell does that mean? So this is okay. What's their core business? It really is military, right? So basically, they were running in job ads during. I mean, who's going to work for Northrop watching a football game? Anyways, I mean, the world has changed. Like, these are signs that, like, what the playbook, I mean, really what's happened here, and we talked about it for, I don't know, a year and a half, or January of last year when we kind of, momentum died. And here we are a year later, and it's really, the defense stocks had a great year, and now they're doing fucking NFL commercials. So, and the stocks are dropping. So this is really just one of those hard markets to trade as a momentum investor. And the two things I look at, Ivan, and I'll let you do the run, because I only have two things to say, is that, like, I'm getting more constructive, but that means I'm going to spend more time on startups, right? Like, because I'm not good at buying broken trends and figuring out which growth stocks are now going to win. Some are acting better than others. If you look at, like, Zillow versus Redfin, you can start separating who has worse balance sheet, right? So they're not trading directly correlated, right? Like, you know, the Qs are way down by, like, the big names, right? They're just going into kind of their own little, can't explain it, I don't know, they're just getting sold relative to equal weight. And then you got CRM, Salesforce was like the granddaddy of enterprise, now has, like, Elliott Management. So let's go pull out a monthly. So now they have, like, a hardcore, nothing's going to happen there. Constructive, you know, there's Mark Benioff's now got Elliott Management on his board. I mean, talk about two opposites colliding. So everybody's paying the piper. Where's Salesforce back at 2017 prices? Can I share my screen? I'll show you one chart that really stood
Okay,
out.
let me stop sharing and then you
Just
can
for a
share.
sec.
Go ahead.
I'll hand it back to you. Look at my, this hat, just grass clippings is stay grassy. Hang on.
You should get one stay gassy, you know, without the R.
Oh, you want to go partners? Hang on. This is the one chart that I found super interesting. Can you see my screen?
Yeah, the Dow Jones versus CRB. Yeah.
So you can see the breakdown in global stocks versus commodities, right? So this has now been going on at least a year. You couldn't, you know, the trade last year, as we talked about, was just being gold in T-bills. Obviously, if you could, you know, trade a few value stocks, great. But, you know, gold and T-bills was the hedge last year, right? Like flat to up, or just get out of stocks. Okay. So now the real question is, you know, this trend is over, right? You've got the interest rates. I'll go back to you now, but this is a real interesting, you know, 8-9 year bull run that's over. So it's going to be very hard. And I'm not saying stocks can't bottom, and you know, I'm constructive because a lot of damage has already been done. But are we back to you?
Yeah, we're going back to me. Yes, and now we're back.
But you know, these trends go on for, I don't know if you can pull up Argentina.
Sure, let's pull it up. Argentina, think. Let's look at the monthly.
Yeah, so look at Argentina. What do they sell? Food. Who do they sell it to? The US, China?
It's not just Argentina, though. Mexico is also at multi-year high. There are quite a few countries there.
No, but Argentina is truly in a corner of the world, right? So now Argentina is becoming like a strategic pawn, right? China wants to open military bases there. And they got food, right? They're a huge exporter of food. So you can see this is like, you know, because Ukraine, you can't get wheat, Argentina becomes even more important. So it's just a lot of things that no one had to think about when interest rates were zero and the government was sending you checks. And that's just over. And it's a very difficult environment. I don't have any great answers yet. I'm constructive though, because the layoffs, you know, you've got some tech, you know, nuclear discussions regarding energy are happening. Interest rates should be on our side. If the market, cracks and goes down, there's room for the Fed to intervene. I don't think they want to, as we talked about last week, but there is. But what worked in the past, and I see it in the commercials, like I said, with Northrop in Argentina, and I see it with commodity charts, that this is just a different beast. And how I'm spending my time constructive is US. Like, if you're going to focus on the US in a deglobalized world, where's the action happening? And that's in the high end stuff that we've been talking about, LVMH, right? People with high margins.
Yeah, all those.
Even though I would never shop or buy any of these products, it's showing you aspiration that the younger generation will aspires to attach themselves to these brands with high margins. So you've got to create stuff with high margins. The other thing, Ivan, I was going to say, what a broken stock. That was one of my faves for a while. One of the things that's amazing about US is you've got AI. So that's finally a product.
Who are the major players here?
I think Google still, and Microsoft, and startups, right? So you're not going to see it show up in Microsoft's financials, so it's only going to be a cost. So there's going to be a lot of startups that benefit from this, a lot of startups that benefit from 10-year execs or product and engineers from Google, Facebook, available to startup companies. So I think you'll start seeing it show up more in the private world than the public world. If we look at the IPO market, it's still a mess. IPO, I think the ETF, just not getting a bounce, right?
I mean, we haven't really seen too many new IPOs. Last year, we're only
it's not just that, but the IPOs that came just aren't getting a bounce, right? Even the broken IPOs that came. So I'm keeping an eye on that.
Some of them actually looking okay, like CRDO, a new one.
Yeah, I'm sure there's a few. So you just got to go through the data. So anyways, I'll leave it to you. That's kind of where I'm at. I'm constructive that we haven't fallen apart. I just don't have any great fresh ideas.
So, I mean, earnings season started about a week ago. Obviously, the big tech is starting to report this week.
Goldman laid an egg, right? Like Goldman.
Goldman missed by a mile, and it was probably the only major negative reaction to earnings so far. Missed estimates, then they're getting sued, I think, or investigated by the government. So 339 is a big level. If it's lost, it can drop 10, 20, 10 more points to its 200-day. But to me, it was more interesting to watch the reaction to Netflix report, since they also missed by a lot, at least earnings. But then the market was looking for the silver lining in Netflix, and it just decided to pay attention mostly on the subscribers growth, which was like 7 million versus 4 million estimates. They didn't care about that it missed earnings by so much in revenue, which it comes to show that there is a change in sentiment. This is very important if this would be like a foundation of what we could see for the rest of earnings season, just the market looking for the silver lining at least in tech's earnings.
I still spend most of my consuming time that's not sports on Netflix, right? There's hundreds of new shows coming out, tons of new content. They're doing these documentaries about niche things, whether it's golf coming out, Formula One led them down this rabbit hole. They're what people don't understand is they have been gathering, you talk about AI, they've been gathering data about what people want to see, right? And that creates this flywheel that they can continue to deliver exactly the type of content you want to see. They're not there yet, but man.
Have you watched the show about Spotify on Netflix?
Oh, there was a show. Yeah, I don't know. I didn't see the show. Will you send me a link?
Yeah, so it's a really good one, but I only watched the first 2 episodes so far. In the beginning, they were talking about how the Pirate Bay was like the main website where people were downloading music at the time and movies, and I guess that's kind of still.
Oh, you mean the Netflix documentary?
Oh, it's not a documentary. It's actually a show based on real events.
Oh, for Spotify?
For Spotify, yeah.
Oh, yeah, send me the link. That'd be
How
cool.
it was founded. Oh yeah, it's really good. So it has some interesting history into, you know,
Well,
how...
you know what, you know, I own this, you know, I own Netflix. Like I'm sticking to brands, I'm not buying more here, but I'm saying I was buying the dips in these two, but these brands have so much potential, right? The margins, everybody knows what they're going to complain about. Netflix just get, you know, who's the biggest benefactor of AI? Netflix and Spotify are two of those, right? Because they already have a huge audience. Airbnb would be another one eventually. So the brands of Web 2,
all the hotel stocks around,
probably even Uber,
Look at this.
Yeah. I don't
So
know
sure,
I stay out of the leisure market because I'm just not the user of any of those products. But the brands that win, it's you know, they're going to be the ones that are going to be around, especially ones with good cash flow, like Spotify and Netflix. Anyways, keep going. Sorry. So I'm not even looking at new ideas. Is anything like breaking out, like true strength?
There are a lot of things that are breaking out and a lot of things that are bouncing. You just need to pick your spot and know your time frame. I mean, for example, Shopify, I traded it already a couple of times this year. Successfully, I bought it again on Friday. Just trying to bounce. I'm playing a short-term bounce.
Some, but there's just no growth, you know.
Yeah, I don't care. I'm swing trading, so it doesn't matter to me. Obviously, biotech pulled back and bounced. I own a little bit of that. There's so many names really that are acting constructively, even in software, like which I was gonna share a couple. So Okta, I mean, they beat earnings estimates last time, kind of went sideways, acting constructively. Now is probably the only company that came out and said, we're not letting people go, we are hiring, we want to hire more people, we're growing like crazy. One of the few software names that said that.
Still look at trading this, at 50 times.
Look at this accumulation here. So I mean, they report earnings,
but they're going to have to execute beautifully. They're still trading at 50.
Of course, yes.
Yeah.
So, and in a bear market,
you're getting a break. Yeah.
You have usually multiples contraction. So even if they sustain their growth, it will be hard. If the market moves sours, which we know that it's possible. I think the next FOMC meeting is on February 1st, so a week and a half ago. So keep that in mind. I mean, we don't know if the market is going to go up or down, but we know that there'll be volatility around it in the days before and on that specific day. So something to keep in mind.
Keep an eye on earnings. We'll keep it short eye just because. And is anything truly like is there any sectors truly breaking out to all-time highs? Is like, or is it?
I mean, China is holding well. Look at Alibaba, just made a big move and kind of went sideways, also getting accumulated. Like I think it's the strongest Chinese stocks with the most potential because of.
Yeah, it's only trading at 15, 20. But I mean, if you believe the numbers, it's only trading at 15 times earnings. But again, like rug pull capital of the world. So
yeah, I mean, I think it's possible. You need to be careful with position sizing here or be short term and just.
These were so beaten up. These can double.
Yeah, use options so you can manage your risk better. And as I said, Mexico's breaking out. So I mean, I don't think there is a specific industry that really stands out. I mean, there are a lot of
it's constructive. Like the word of my word is constructive. Like you don't have to. Like,
individual biotech stocks that are setting up, but they're the bid-ask spread is not the tightest. These are not easy to trade, so you need to be careful also with them. But yeah, I mean, the most stocks are moving in tandem, just high correlations. So
okay, all right. Well, have a great week, my man.
You too, Howard. See you next week.
See you, everybody.
Bye.